Welcome to this explainer. If you have rental properties in Kansas City, you probably have a decent amount of equity just sitting there, completely trapped. Today, we are going to act as your guide to unlocking that hidden value. This explainer is brought to you by Alpine Property Management Kansas City, a team that has been managing over 250 properties for investors across the metro since 2013. You know, having your money tied up in an asset can be incredibly frustrating when you are ready to scale. So, let us dive right in and look at the exact mechanisms you can use to pull that equity out.
Okay, let us take a quick look at the roadmap for today. We will start with the Kansas City equity dilemma, then move on to cash-out refinance mechanics. After that, we will cover the 1031 exchange rules, then compare fees and friction, and finally wrap up with choosing your portfolio strategy.
Section 1. The Kansas City Equity Dilemma.
So, what exactly is this dilemma? Well, let us look at the numbers. If you bought a house near the Kansas City metro median a few years back, it has likely gained tens of thousands of dollars in value. At the same time, rents have been steadily climbing, landing right around Alpine's portfolio average of $1,300 to $1,400 a month. So you have a property performing brilliantly, right? But here is the catch. A massive chunk of your net worth is quite literally stuck inside the drywall. It is just sitting there, and it is not building your empire until you figure out a way to deploy it.
And that brings us to the ultimate crossroads almost every investor faces at some point. Do you pull the money out with a new loan? Or do you sell the property and roll those proceeds forward tax-deferred? Back when money was cheap, this was a total no-brainer. But in today's high interest rate environment in 2026, the right answer completely depends on which strategy protects your remote cash flow. It is definitely not just a simple tax calculation anymore.
Section 2. Cash-out refinance mechanics. Let us explore our first option, the cash-out refinance. This is where you replace your existing mortgage with a larger one and pocket the difference in cash. This brings us to debt service coverage ratio, or DSCR loans. Now, these investment property loans consistently price higher than conventional loans, and that is because of the specific underwriting risk. Instead of digging through your personal tax returns, the lender looks straight at the properties leased to make sure the rent covers the debt. And honestly, the best part? Borrowed money is not income, meaning this transaction happens entirely tax-free. But, and this is a big but, you absolutely have to watch the rates. Just for context, the benchmark Freddie Mac conventional 30-year fixed rate was sitting at 6.69% in August 2026. Because DSCR loans carry a premium on top of that conventional line, your new monthly payment is going to compete heavily against your existing rent check. You literally have to run the math meticulously. You need to ensure your $1,400 in rent can easily clear the new principal, interest, taxes, insurance, and of course your maintenance reserves. Now, from an operational standpoint, a cash-out refinance is practically frictionless. Since the whole thing happens on the financing side, your tenant just stays put. There is absolutely no disruption. Even better, your Alpine management fees remain completely untouched. Their fee tracks the rent amount. It does not track your underlying loan balance. So, a $1,400 rent stays right there in the 8% tier, which means a fixed $112 monthly fee. Plus, you do not trigger any lease-up fees because, well, the lease remains exactly the same.
Moving on to Section 3, the 1031 exchange rules.
Let us pivot to the alternative path, a 1031 exchange. This lets you sell your property and roll the proceeds into a new, like-kind investment. But let me tell you, the mechanics here are incredibly strict. They run on a rigid federal clock starting on day 0, the exact day your relinquished property closes. From there, you have exactly 45 days to identify replacement properties in writing and 180 days to close on one. And make no mistake, these deadlines run concurrently. They are not back-to-back. If you miss a deadline by even a single day, your entire gain converts into a fully taxable sale. Now, a quick reminder that this explainer is strictly educational. It is not legal or tax advice, so please consult the professional CPA. But there is a huge local advantage here we need to talk about. Missouri and Kansas both calculate state income tax starting from your federal figure. So what that means is, if your gains are deferred at the federal level, they are typically deferred at the state level too. That makes the 1031 a seriously powerful wealth-building tool here in the KC Metro. The tax benefits we are talking about are massive. When handled correctly, an exchange defers your capital gains tax entirely. It also defers depreciation recapture tax, which otherwise caps out at a 25% federal rate. Just remember, the proceeds have to be routed through a neutral third party called a qualified intermediary. You cannot just pocket the cash yourself. Also, this rule only applies to real property. So you can swap a duplex for a commercial building, but you cannot swap real estate for business equipment. Ultimately, an exchange keeps more of your sale proceeds working hard for you in your next replacement property. Section 4, comparing fees and friction. This table perfectly illustrates the need to compare these two options head to head. We really need to evaluate the friction involved in each scenario. A cash-out refinance is all about stability. You keep the property, there is no tax on the transaction, there is absolutely no deadline pressure since you close whenever the DSCR clears, and there is no impact on your Alpine fees. A 1031 exchange, on the other hand, is a different beast. You are selling the property, your taxes are deferred, not eliminated, and you are under that strict 180-day deadline pressure. Plus, if your replacement property is vacant, an Alpine lease-up fee will definitely apply. So what does this all mean for you? Well, it depends on what type of cash flow you need to protect. A cash-out refinance protects your short-term cash flow. Your tenant stays and the rent keeps landing in your account on the exact same uninterrupted schedule. A 1031 exchange protects your long-term wealth by deferring that hefty IRS bill, but it introduces short-term risk. You are racing against the clock, and a vacant replacement property means you might face a few weeks of zero rent during the lease-up phase. And that brings us to our final section, Section 5, choosing your portfolio strategy. So when does an exchange actually make more sense than refinancing? Well, a 1031 is the absolute right call when you are seeking a full repositioning of your net proceeds rather than just pulling out some equity. If you are exiting a submarket that has stopped performing, or if you are dealing with a property that has nearly used up its depreciation or has compounding deferred maintenance, sell it. If you are escaping chronic tenant turnover, it is time to get out. That is when you fully redeploy your equity into a much better Kansas City purchase. Now, you might be wondering, can I combine these strategies across my portfolio? Yes, you can, but sequence absolutely matters. If you plan to pull cash out via a refinance right before a sale, be incredibly careful. The IRS can treat that borrowed cash as taxable boot, meaning immediate taxable income, which completely undermines your tax deferral. You cannot just safely refinance a property for cash and then immediately roll that very same property into an exchange. Always coordinate timelines with your CPA. By understanding the math, the market, and the mechanics, you literally hold the keys to scaling your wealth. So ask yourself, is the equity sleeping inside your walls right now working for you, or is it finally time to put it to use? For help managing your Kansas City rental property, call Alpine at 816-343-4520 or visit alpinekansascity.com.